The future of the Iraqi dinar, IQD, and Vietnamese dong, VND, an in-depth analysis of global currency trends in the ever-evolving world of finance, currency speculation and investments remain a hot topic for traders and investors alike. Among the most discussed currencies are the Iraqi dinar, IQD, and the Vietnamese dong, VND, two currencies that have been at the center of speculation regarding potential revaluations, economic stability, and investment opportunities. While some view these currencies as undervalued with the potential for major gains, others see them as high-risk investments that require careful analysis and patience. This article explores the history, current status, and future predictions of the IQD and VND, diving into the economic forces shaping their value and the global trends influencing their trajectory. Chapter 1. Understanding the Iraqi dinar, IQD, and its historical significance. 1.1. The rise and fall of the Iraqi dinar. The Iraqi dinar has a rich and complex history, deeply tied to Iraq's economic and political fluctuations. Once one of the strongest currencies in the Middle East, the dinar has gone through extreme volatility due to wars, sanctions, and internal instability. In the 1970s and 1980s, the Iraqi dinar was valued at over $3 per IQD, making it one of the highest valued currencies in the world. However, following the Gulf War in the 1990s, the country faced severe economic sanctions that led to the collapse of its currency, forcing the Iraqi government to print large amounts of money, leading to hyperinflation. By 2003, when the U.S. invaded Iraq and removed Saddam Hussein from power, the currency lost nearly all of its value, dropping to an exchange rate of over 1,000 Iraqi dinars per USD. Since then, the dinar has remained relatively stable but continues to face challenges due to political instability, oil dependence, and the need for financial reforms. 1.2 Recent developments in Iraq's currency policies. In recent years, Iraq has been working on stabilizing the dinar by implementing monetary policies aimed at reducing inflation and attracting foreign investments. The Central Bank of Iraq, CBI, has taken steps to reduce the amount of currency in circulation to control inflation, strengthen ties with international banks to facilitate foreign investment, explore digital financial solutions, including the potential introduction of a digital dinar for global transactions. The push toward economic diversification is also playing a key role in shaping the future of the dinar. Iraq is heavily reliant on oil revenues, but efforts are being made to expand into other industries such as technology, manufacturing, and tourism. Chapter 2. The Vietnamese dong, VND, and Vietnam's economic growth. 2.1. The evolution of the Vietnamese dong. The Vietnamese dong, VND, has long been considered an undervalued currency. But unlike the IQD, it has benefited from Vietnam's impressive economic growth and stable government policies. Vietnam has transformed itself into a major manufacturing hub, attracting foreign investment from countries like the US, China, South Korea, and Japan. With a GDP growth rate consistently above 6%, Vietnam has emerged as a strong player in the global economy. Despite this growth, the VND remains weak against the US dollar, trading at around 24,000 VND per USD. This is due to Vietnam's strategy of keeping its currency relatively low to encourage exports and attract foreign investors. 2.2 Vietnam's potential currency revaluation. While speculation about a VND revaluation exists, the Vietnamese government has been cautious about rapid currency appreciation. The key reasons include check export-driven economy. A weaker dong makes Vietnamese exports more competitive in global markets. Controlled inflation. Gradual appreciation helps prevent economic instability. Foreign investment dependency. Vietnam relies on FDI, foreign direct investment, to sustain its economic momentum. However, if Vietnam continues its rapid economic expansion, we may see a gradual strengthening of the Vietnamese dong in the coming years. Chapter 3. Key factors influencing IQD and VND valuation. 3.1 Oil prices and global demand. Iraq's currency is heavily dependent on oil prices, as over 90% of the country's revenue comes from oil exports. When oil prices rise, Iraq's economy strengthens, leading to increased demand for the dinar. However, if oil prices crash, the IQD faces devaluation risks due to a lack of economic diversification. Vietnam, on the other hand, benefits from a diversified economy, reducing its dependency on any single industry. 3.2 Foreign exchange reserves and central bank policies. The Central Bank of Iraq, CBI, and State Bank of Vietnam, SBV, play crucial roles in controlling exchange rates through monetary policies, foreign exchange reserves, and interest rates. Iraq has been increasing its foreign currency reserves to stabilize the dinar. Vietnam has implemented strict currency controls to prevent market manipulation. Both countries need strong fiscal policies to maintain currency stability. Chapter 4. The Future of IQD and VND, Predictions and Investment Strategies. 4.1. Will the Iraqi dinar revalue? There has been constant speculation about the Iraqi dinar undergoing a major revaluation. RV. Some believe that Iraq's economic reforms will eventually push the dinar's value closer to pre-1990 levels. However, for an RV to happen, Iraq must implement stronger economic policies and reduce reliance on oil, strengthen international banking relationships, maintain political stability. A gradual appreciation is more likely than an overnight revaluation. 4.2 Vietnamese dong, a slow but steady climb. Vietnam's economy is on a strong upward trajectory, and while a massive Vietnamese dong revaluation is unlikely, gradual strengthening is a possibility. If Vietnam achieves developed market status, the dong could appreciate. Strong foreign reserves and economic stability could lead to higher VND value. However, Vietnam must balance currency appreciation with export competitiveness to maintain economic growth. Conclusion. Should you invest in IQD or VND? Both the Iraqi dinar and Vietnamese dong have unique opportunities and challenges. Investing in IQD is a high-risk, high-reward play, relying on Iraq's economic transformation and potential currency revaluation. Investing in VND is a long-term, steady-growth investment supported by Vietnam's strong economy and export-driven policies. For investors, the best strategy is to diversify and stay informed about global economic shifts. Key takeaways. Iraq's financial reforms could impact the IQD's value, but risks remain. Vietnam's economic growth makes VND a more stable investment choice. Global trends, oil prices, and central bank policies play crucial roles in currency fluctuations. As always, before investing, do your research, consult financial experts, and understand the risks involved in currency speculation. Final thoughts. The road ahead for IQD and VND. Both Iraq and Vietnam are at critical turning points in their economic journeys. The IQD has potential, but requires strong government action, while the VND is steadily gaining ground due to Vietnam's industrial growth. Investors should keep an eye on government policies, global market trends, and international financial developments when considering these currencies. Stay informed, invest wisely, and follow global financial trends for the best outcomes.